Yo, you're gonna be doing my second post trade analysis of the day on Bitcoin, and we're also gonna cover PEPE in this one because I took two trades, both losses. So gonna be journaling those, seeing where I might have gone wrong or if it was a valid L to take, all that kind of thing. Looking at the higher time frame, macro top, aggressive move down, hitting the technical target and tapping into a key POI there, and then getting pretty aggressive reaction away with some low time frame breaker structures within there, expecting a range creation, and that is what we got. Some distribution models hit the technical target, and then a little bit of exhaustion, move up, and we're kind of in this range overall. So we were in this range, and the range was somewhat compressing. So I was looking at this from a compression perspective like this, where we got the compression here, and the model I traded was the first move fake move out of the compression, being this right here. First move fake move down, boom, and then looking at first move fake move down, and then to get the rotation back up, essentially just trading the compression. Nice contextual environment here. We had the distribution like this, and then price came back for a retest. So this is what we were looking at, anticipating on something like this. First entry I took was right here. So this was the third type POI I was watching. First trade I took was, upon this mitigation of the high time frame POI for an extended tap, which honestly, looking back at it, and also, it's easier to say after seeing the aftermath, but, looking back at it, it's not the highest quality entry just due to this. It's not the highest quality stop loss placement, just due to the fact that you have this POI right below you, and you are tapping in to the POI that is not closest to the deviation of tap one. The way I justified this when taking it is that we are already in the confirmed model. The fact that we are already in a confirmed model can be reason to get a shallower retest than the most extreme zone, because we've definitely seen it before where you have a model 1, and then when price comes back for a retest, it comes for the slightest mitigation of the extreme demand, not coming for the refined level. We've seen that many times where it comes for the most shallow mitigation. Like, it doesn't go deep into the zone, coming for the most refined level. So, I was looking at, okay, we're in a confirmed model, so it's definitely possible to get that. But at the same time, it still is just a sketchy stop loss placement because it's so high up in the range. And you're very vulnerable to getting something like this. Also, we were about to enter after hours, so that was a bit sketchy because, you can get some, price action during after hours, some lower volatility. Then you can have Asia, pushing down, sweeping out the after hours lows before moving up and getting like the real breaker structure on Asia. So there was a lot of room for error within the exact entry point. So, I'm not super happy with it looking back. Another confluence I had to give me confidence in this trade was, let me pull up the photo. I have it here. Let's see. Okay, never mind. But it was a trade on Sui that I took in the past that was very similar to this, where you had these sharp tap 2 and tap 3, and then you came back, you exceeded the high between the sharp 2 taps. Although that one was a Model 1, so maybe that's just the thing is in the Model 1s you get that shallow retest, not the Model 2s. So I'll have to monitor that going forward. But you came above this high on Sui, you actually broke aggressively above it, so that was another difference. And then you came into here to the higher, the more the less refined POI. Although on Sui you did deviate your tap 1, so there was definitely some differences. But in the moment I justified it, so maybe that's also a psychological error on my end for sure. And then Sui, came in for the extreme liquidity, front running the extreme demand in its case, and got a 1 hour bottom formation within the POI, and that was the confirmation. So I was entering on the anticipation of this 15-minute bottom formation up here, and I think it was on this close potentially. Yeah. Because we had this trap zone above that we had definitely disrespected by then, and we also had the 15-minute bottom formation. So yeah, kind of entered with that 15-minute bottom formation in mind as being, quality enough low that my mind was, had probabilities to not get revisited. But yeah, just overall, it wasn't super high quality. The better play would have been to enter with a limit order right here, seeing the slow pullback, stop loss below this low. Gives you better de-risking opportunities, and you can still take part in the move if price mitigates this POI and doesn't come for that lower POI. It's just a bit lower RR. So maybe there was also a bit of greed there on my end, trying to hop in a bit too early. Overvaluing the potential trade opportunity here. So yeah, there was that. And then as price progressed, we actually did come for the refined POI here. And I didn't have it drawn correctly. We came for that refined POI there. Price popped up after mitigating the refined POI. Closing above there, and then I re-entered the trade. This also, wasn't the highest quality entry for 2 reasons. One being the 10-minute order block resting above the entry. 2 being the fact that the entry was during after hours. So when you enter during after hours, you really want there to be no room for error. So yeah, the fact that we came into there and then, kind of got a mediocre breaker structure. Not the best. We were wicking it, and then we got the close above. Not the best, not the most quality breaker structure. Got the close above. It's kind of like decent. It's not horrible, but decent V shape there. But yeah, having the 10-minute supply above, paired with the fact that it was in after hours, made it a bit lower quality. From a placing your stop loss here perspective, because you can always come up and then Asia comes down and then, takes you out that ways. So, the most comfortable thing would have been to be in a position on this mitigation with your stop loss here, and then just kind of being patient through all this, waiting for some more convincing price action, like a mitigation of the POI with an aggressive break on that Asia open, something like that. Because when you're entering it after hours, you gotta be careful and only enter on the highest probability of confirmations. You don't really want any room for error around the exact stop loss place and entry confirmation when you're entering in after hours. And then we saw price coming lower there. So yeah, by that time, the model was looking pretty ugly. We were putting in equal lows here. Not really of interest to trade any longer. But if we come over to PEPE here, we actually got a pretty quality confirmation on PEPE, where we, on that move down on Bitcoin, we came in, we swept the extreme liquidity, except for Bitcoin wasn't necessarily giving the confluence, putting in those equal lows, not really looking like it wanted to accumulate from there, looking like it could definitely come and sweep out those lows again. But on the same time, we had PEPE coming down with a supply creation like this. Came down with this supply creation. This is your breaker structure level below the supply creation. Let's actually cool off for a second and go over the higher time frame context on PEPE. So we had been trending down, leaving lots of buy side liquidity above on the high time frame before getting that pop down, which we never exceeded that high of that aggressive move down. But from there we did create lots more buy side liquidity, creating a good buy side liquidity target there, where we then form this range with some sort of an accumulation as the range low, and then as you can see a bit more of a narrow third tap, but overall having a return to zone leading into it for the most part, which is kind of in nowhere, just in this wick. So I'm not going to go too into detail there, but you can see that we broke our structure after deviating that low pretty aggressively here. And then locally here, we're getting the back test into that POI, because technically this entire thing is your structure demand of that market structure break. Technically this entire thing is, I will take that off of the chart for now though. And then this high right here front ran all of this liquidity, so you can kind of look at this as a naked high, somewhat of a naked high, although we did get a harsh rejection. So naked highs are definitely better when you come down, trend down, leaving liquidity above. Here we created that high formation, so it's not really a naked high due to the topping formation that we had. It's more of just like an individual high. So we can highlight that red. More of like an individual high where it did front run the liquidity, but at the same time it did have somewhat of a topping formation, so it could not want to get revisited right away. It had that topping formation with fairly aggressive push out of it that has that inefficiency somewhat on the lower time frame. I guess we can always kind of label it this way. There we go. So we created some supply above on that push down with a little bit of a topping formation there, and then trended down in a decent amount of time. Some locally I would call this semi-pro context, especially with the accumulative bottom and the bullish break right there. Definitely some semi-pro context following your main market structure. And then we got this accumulation here. Sorry about that. Where this low already did mitigate some demand, but the fact that we exceeded the high, and then locally in the lower time frame, we just left a bunch of liquidity there. We can then use it as an extreme liquidity point. But this model ended up failing, so it's also something to note that it didn't end up working that well. And that's mitigated through, but you can see the amazing return to zone that we have above this supply zone creation, and the just super clean ranging environment that we created here locally, like this. And the fact that, we're deviating, we kind of got that dump down right on our Asia open, so we can label this fake supply and a manipulation POI. And then we got the dump down, and we're kind of starting to see some nice bottom formation sweeping that liquidity with some nice wicks, deviating that volume area low. And then you can see, boom, we pop up, mitigating the supply, breaking structure bullish. So that could already be an entry, but as you can see, we rejected, and this is where I found my entry, was on this level 2 break right here. Pretty clean push up that we got there with a nice level 2 aggressive breaker structure coming into this extreme demand here. And although Bitcoin was looking like it was failing, confluence I used for this model was actually USDT dominance, which still had a fairly decent model. You see, we're currently on February 17th, 1832. If I go over to USDT dominance, I won't be in replay mode, but we can see here it was on that, that local high that put in basically equal lows with Bitcoin way deep outside of the range. USDT actually came up for a nice tap 1 deviation there, mitigating the extreme liquidity and then getting that aggressive move back down. So 1832 was right here, was where USDT was located on that confirmation on PEPE. So this was looking like a clean model, clean confluence right here. Having this model 2 with the extended tap, push up right on Asia with the correction. So yeah, USDT was still looking good in this moment. So ended up taking the trade on PEPE and took 3 back-to-back L's. So that was pretty brutal. PEPE, I would say, was the most valid trade out of them. Second entry on Bitcoin wasn't horrible. The first one was for sure the worst. Second one, honestly, just like with that after hours tip, could have been avoided. And, just entering with the stop loss with that better placement on that first one, I would have been in a more comfortable position there with my stop loss. I could have just chilled and let the price action play out until I saw something more convincing to trail, potentially, and add on Bitcoin. And then PEPE, market was just decided to come lower. And as you can see, when the market came lower on Bitcoin, we came lower. We got another pull to the downside, another market structure pull to the downside prior to a range creation here on Bitcoin, where we then got local accumulation with your 1, your 2, and your 3 that has now hit the technical target. So you can see that idea of the accumulation just needed some more exhaustion prior to playing out, but at the same time is super close to the range low, and this wasn't quality of trade at all. And here we did have some exhaustion, and then we also had the compression. So this was nicer. This was just super close to the range low. So yeah, just unfortunate how things go sometimes, but yeah, that is the video. Appreciate you guys for watching. I will see you on the next one.